Hey, what's going on, guys? Welcome back to the channel. In today's video, I've got a great one for you. We are going to be taking a deep dive into my Robinhood investing portfolio. I'm approaching $100,000 in this account. Been investing a couple different ways, more recently changing some of the approach. I want to talk about it all in this video because there are a lot of opinions that I ran into talking about my Roth IRA in some of the recent videos. And yeah, let me just show you what I mean. So I'm going to pop open the Robinhood investing app and you should be seeing it in 3, 2, 1. Bam, should be on your screen now. Now on this Robinhood app, you guys know that I invest in my Roth IRA. There's only two investments that I hold in this account. It is SCHD and VTI. Now, a lot of people are weary about me investing in SCHD for my Roth IRA. Don't worry about it. Like, I've got so many different growth investments that I have as well in other areas. This is just a fundamentally, like, this is the account that I am going to be able to retire even early off of, just if I stick to my investing approach that I have here. Now, SCHD, why I love SCHD is because, well, if you look at year to date, these are more value dividend oriented. Like, it just is the sort of balance in my portfolio that allows me to feel really confident in times of turbulent markets. So year to date, this bad boy's up 12.18%. I'm actually up 18.65%. And if you factor in all of the dividend payments that I've received, this is actually significantly higher in terms of a return. So that is one of the portions in my Roth IRA. The other one is VTI. Now, if I go year to date on VTI, look at that. We're down 1.17%. And there's been a little bit of a recovery the past couple of days, but it was as far down as 7.55%. So that is a massive swing when you compare it to something like SCHD. And SCHD, dividend investing just seems to make a lot more sense for me. And I understand that at a younger age, people don't love dividend investing. They want to target growth. Don't you worry. I've got a lot of growth stuff going on as well. Now I have other portfolios, other accounts that I have, and I've got other accounts that I have that have more growth, but even in my Robinhood investing portfolio, I've taken an approach that I've been going after more growth lately, especially as the market's been really turbulent, everything going on with Iran, all of the stuff that's happening to the market right now is like, it's great for younger investors. You can capitalize on lower prices, and that's exactly what I've been trying to do. So again, this is just my Roth IRA. That's the approach I have in there. If I go over into my investing portfolio, I haven't showed this tab in a while, but I've made some pretty significant changes in this portfolio. And Robinhood's got this sick feature where you can you can understand what your realized profit and loss is right now. So I was able to cancel out a lot of the investments that I have, so that way I'm showing a loss, which is going to help come tax season. But I realized I was making a lot of investments in this account that were already incorporated into the bigger ETFs that I was holding, and I had exposure into a lot of them. And so I was kind of doubling down on individual companies that realistically were such a small, minute portion of my portfolio that it just made a lot more sense for me to consolidate into ETFs. And one of the main ones that I went into is QQQ. So QQQ, if you look at the past week, what's really cool is I actually bought about 8 grand worth, like 3 grand and 5 grand the next day when it was down, this 0.13% here. And it's since gone up pretty well. So QQQ is obviously one that, a lot of people talk about. Right now, this is just so you have an idea of my current position. I've got 29 shares. My average cost is around $558. It's 604 right now. This is something that I'm dollar cost averaging in. I think every 2 weeks, you can see I have this bi-weekly buy right now. That's $500 going into this investment. Dollar cost averaging, literally something that I'm not going to be looking at, just going to let my money do its thing. And I'm going to continue investing more into this. Now, if you look at the top 10 holdings, again, this is where I was starting to see the exposure that I already had in some of these companies that are significantly held in this portfolio, and they were in my portfolio. It just, again, it made sense for me to consolidate. So we've got Nvidia, Apple, Microsoft, Amazon, Tesla, Google, Walmart, Meta. And what I like about this is it is diversified from like SCHD, which is what I was talking about before. If I go back into the this here, I scroll into SCHD and we'll look at just the top 10 holdings of SCHD. You're gonna notice they're entirely different. Chevron, ConocoPhillips, Merck, Coca-Cola, Texas Instruments, like United Health, which United Health just went on an absolute tear recently as well. Just interesting to see, like, I've got this diversification. This is the investing that I actually resonate more towards. It's just, it makes more sense. I really like it. It's comfortable for me. I don't see these massive fluctuations with some of my investments, but especially when the market is pretty crazy, when you're investing in something like QQQ, rather than it being super stable, you get charts like this where you have big spikes, big dips. If you look at what they're doing year to date, it's nothing crazy. But Even the past year, it's still up about 38%. So it's tough to look at these investments and be like they're bad or anything. I obviously hold them in my portfolio, so I don't think that they're bad. But I just try to calm people down because they see what I'm doing and they think that there's no growth whatsoever in my portfolios. And it's like, no, 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 no. I've got this account that's growth. I've got more accounts that are growth. I actually have more investments in Robinhood that are growth as well. I just like talking about the dividend stuff because it's just way more my style as an investor. I don't like the risk some of this stuff has, and I just love collecting dividend income. And it's all about cash flow, especially for me, somebody who's going to be able to or wants to be able to retire early. Cash flow is going to be really important in those scenarios. And so, yeah, these growths can be great, and people will transition to dividend investing, whatever. I like building some of that cash flow now. It just helps me stay on track, and I like seeing that grow. So again, QQQ. Another big holding of mine. Now I've got Apple as well, which again, you saw that as one of the bigger holdings in QQQ. So I'm kind of double dipping there, talking about some of the stuff that I was before. But Apple is one that I actually really like as an investment in my portfolio, and I wanted to hold on to this one specifically because I like the value. If I sort by my equity, you'll see what's going on. So I've got about 17,000 in QQQ, 7,700 in Apple. Meta is in here as well. I actually think Meta has been deeply discounted for a while. They're going through some massive reorg structuring. They're taking a lot of the money that they were putting behind the infrastructure on their metaverse, and they're rolling it into AI, different models, their glasses. I actually own a pair of the Meta glasses. I think they're freaking sick. And so I've thought for a little bit, Meta's been a little bit undervalued, I guess I would say. So I actually want to increase some of the investments there. And then AbbVie, I just had a good position on, so it was hard for me to let go of that. You don't want to get like too nostalgic with stocks, which is where I've found myself in the past. Again, the Roth IRA, nothing crazy here. I just do the two. The one thing about the Roth IRA is that I have the Roth IRA match, which is awesome. So if I click into it, you can see in 2026, I've already gotten $225 free just for having this in Robinhood investing. 2025, it was $210, and the year before that, another $150. So this is all free money for me, and it doesn't count towards my contribution limits. So I love doing that. I've also got this purchases portfolio that I have going on right now, and I'll sort it by my equity. You can see that this, again, I'm double dipping into some of the QQQ stuff, but as I've made newer videos recently, I'm talking about like the different AI things that I'm building, the tools that I've helped identify what individual stocks that I wanted to be investing in. That's where this portfolio comes into play. It's sort of testing the hypothesis that I've created around some of that stuff. So I've got more of the risky NVIDIA, Palantir, Taiwan Semiconductors, and it's just investments that have a high risk but high reward to them. And I just see with where things are shaping with AI, like some of these investments being really solid. So also in here, Microsoft, I've got some Anheuser-Busch, right? And they've all gotten some decent returns for me right here. But these are just some of the more one-off. This is literally like almost an AI generated portfolio that I wanted to make content on in the future and just compare it to how some of the returns are for me and what that looks like. So realistically, that's what I have going on right now. A big portion of my strategy is continuing to dollar cost average into QQQ with those bi-weekly buys. I've got another $5,000 in buying power right now, just from some of the stuff that I had sold off. It says I've got $9,000 in cash earning interest, but the buying power here, $4,891, and I'm actually going to be adding more to this. So a lot of people were questioning in my recent video where I talked about investing $22,000, whatever it was. They were questioning the income streams that I had, where I was actually making the money to be putting more into the market. And maybe I'll do a whole dedicated video on that. But just to answer that question up front, I've got like multiple different income streams. One is obviously like YouTube. Anybody who's watching these videos, it is a massive help just to get some of the advertiser revenue that comes in through that stuff. But that's not as significant as things like the 9-to-5 job that I am working. So I do this stuff on the side. I work 9 to 5. Also, this property that I'm in, this is a duplex that I rent out one of the units. So I'm able to capitalize on getting cash flow from real estate, which is freaking awesome. So between 9 to 5, YouTube, real estate, I've got other side hustles going on, other little business ventures that I have created that have been panning out pretty well. Those coming in too, affiliate marketing, all these different things going on. This is just something that I've been building over the years. And yes, I could do, if you guys are interested, an entire breakdown, maybe show you how much I made for a month, a quarter, whatever it is you want to see. Leave a comment if you're interested in seeing some of that stuff. But what you're going to see on this channel is a lot of those different things are starting to pan out. And so I'm getting access to more cash that I can then go invest with. And it's all sort of happening at a really solid time. I'm also at this pivotal time where I'm trying to save a bunch of money. I'm going to be moving out, renting this place out fully, potentially moving to an entirely new state. I've got North Carolina on the list. If you have any suggestions, again, leave a comment down below. I'd be interested to hear what people have to say there. I live in a really high cost of living area. I've also optimized my life in a way where I just spend minimal money and like have full enjoyment over things going on. Cheapest phone bill possible, like really rigid on literally groceries. Like I've optimized the internet plans that I'm on, like the insurance that I'm paying, everything that I've done in life. Like I'm such a nerd when it comes to finances and money. It's fun for me to figure out how to save more money. And so I've optimized my life in a way where it's like, man, I'm just able to save a lot more than your average person because I'm just so in tune with the finances. I remember like just this past week, I was looking at my internet bill, which somehow doubled in a month. And like most people probably wouldn't have caught that. Saw it right away. I'm now on a way better internet plan. I'm saving $5 a month from it than I was before. Like I just am so in tune with all of this stuff financially that it gives me the opportunity to then just shovel stuff back into the market. And so, yes, I've got a lot coming in the future. I'm going to be sharing all of those moves that I'm making. So make sure you're subscribed to the channel. Hopefully that gives you a little bit of a deep dive. Again, I'm optimizing right now for simplicity. When I'm talking about moving to a new state, like literally eliminating more expenses, hopefully buying an individual house at that point, maybe some more rental real estate that I could go after. But all of the stuff that I'm trying to do is to optimize to get the most value out of my time, the money that I have. And so that's where I'm making some big changes here in the future. Now, if you guys want to stick around for that journey, I would be super glad to have you around for that. And any support by leaving a like on this video means a lot. Thank you so much for checking it out, and have a great day.